This is Mark Anthony with Mercury Time Price Analytics with our end-of-day algorithmic trading video update for ESNQ bonds and crude oil for Thursday, February 13th. All right, so let's start with yesterday's close. Into yesterday's day session close, we had a key level here, pardon me, at 33.73.74. We tried a couple times to get short. The first trade was a scratch, no profit, no loss. The second trade, we booked a few handles, got stopped out, made a few handles on the trade. We trade with very tight stops. Everything we do is built around risk management. You can trade long, you can trade short. You cannot trade without proper risk management. There is a reason that over 90% of people that trade futures will lose money. It's because the professionals, the institutions, the large hedge funds use a level of risk management that they just don't teach you. And unless you've had many, many years of trial and error or had good teachers or you have this level of mathematical precision, these are the most dangerous futures markets to trade that I've ever seen, talking about ES and NQ. And I'll show you a couple of charts that validate that. Now, one of the first things we did last night before the Globex opened at 6 p.m. Eastern Time is we put this first resistance level, 33.8550, out for our subscribers. We have a live chart on Zoom, so our subscribers all day long, they see the live chart, our day trading algo, our swing trading algo, as well as about 7 other indicators that we have on the screen. But we put this out last night. I fully expected ES to trade up into it. Well, then we got the news regarding the coronavirus out of China. And the tape broke. There's algorithmic headline reading, or I call them headline scraping algos, and they look for keywords, and there's artificial intelligence in them. So as soon as that report was published, you got this. I had walked away from my desk for a couple minutes. I came back. I saw this extension bar, and very fortunately I was able to get in that trade short right at 33.74, the same price we were trying to short at the end of the day. Literally walked away from the desk for about 2 minutes. Now, is it luck that I was able to get short at the same price we were trying to get short into the day session close? Sure it is. But I can also tell you that luck tends to happen for people who are very, very prepared. So that was just one of those things. You spend hours a day preparing, and every once in a while you get lucky like that. Now, what's interesting is where that trade came down to. It came right down to our trend confirmation pivot. Now, one of the things about this market is you can be in a trade long or short that's making money, and immediately they pick your pocket, the tape reverses, takes it away. Well, the advantage of trading with mathematical algorithms is once you get in a trade and it starts to work, we give you point after point after point after point after point. 1, 2, 3, 4, 5, 6, 7, 8 pivot levels with which you could have taken profits. Now, we teach our subscribers, and a lot of them know this already, but we recommend you trade in thirds. And that means you're trading a number of contracts divisible by 3. Now, let me stop for a minute and talk about risk management, because everything we do is built around risk management. You don't decide how many contracts to trade based on how many contracts your broker will let you put on. You don't look at your account and say, okay, my broker will let me put X amount of E-minis on based on their particular margin requirements for the day session or the evening session. It's not how you do it. Professional traders only risk a very small portion of their account on any particular trade. And I want to share with you very quickly the same analogy that I shared last night. If you saw last night's video, bear with me. Imagine you owned a retail store. The inventory at your store is the lifeblood of your business. You have no inventory, you have no business. So if you owned a retail store, would you ever at any time put your entire inventory at risk on one supposition? Of course not, because if you were wrong, you lose your inventory, you have to recapitalize your business. Yet that's what many traders do. And I'm not saying that one bad trade is going to wipe you out, but because of the leverage that's inherent in futures to begin with, and the additional leverage you get from putting on futures positions with margin, If you're trading the max contract size your broker will let you put on, you have a trade that goes a couple of handles against you. All of a sudden, you're drawing down your account. And now you can't even put on that number of positions. So always look at how many contracts you can put on and then scale it way, way back. I mean, most professional futures traders don't risk more than 10, 20% at the most, at the very high end, on any particular trade. Because the other negative side effect of having too much size is you get gun shy to pull the trigger. And there are times where you'll get into a trade, and we only take trades based on setups. It's not based on gut feel. Although I will tell you, at the end of the day, this was the first time in a very long time I put out a trade based on gut feel, because nothing that happened today made sense, and I'll talk about that in a minute. But if you're using math, you're using algorithms, and you're using proper risk management, here's the secret. You can be wrong more than you're right and still do very well. One of the things with beginning traders is they get so obsessed with win rate. What's the percentage of trades that made money versus lost money? What's more important is the differential in how much you make on a trade when you're right versus how much you lose when you're wrong. I mean, literally, you can be wrong 60% of the time. But if your losing trades are based on a small percentage of your account size, i.e. proper risk sizing, and the number of handles you're giving up when you're wrong is 2, 3, 4 at the most, and then on the other hand, when you're right, you're booking 10, 15, 20 handles, you can do really well in this business. But without risk management, you can have the best metrics, the best indicators in the world, and you're going to lose money. And you may make money for a little bit, but eventually you'll lose, because in futures, if you're risking more than a small portion, you're going to eventually run into problems. And I appreciate you bearing with me, because if you're watching this video, if you've traded for any period of time, there's nothing more important than what I just said. Now, how do you know where to take profits? Well, these horizontal lines are arithmetic, algorithmic pivots. We never put lines on a chart based on, well, this looks like such and such a technical pattern. Every horizontal line on this chart is based on a mathematical time price algorithm. And the reason our algos are so precise is that they're predominantly based on time. Sure, there's a price component of it, but you can't build an algorithm that's heavily weighted on anything but time, and here's why. Here's price. It's a vertical axis, right? So hypothetically, price starts at 0 and goes to infinity. You can't anchor anything to something that goes from 0 to infinity. Now look at a clock. It's round. There's the same there's the same amount of hours, minutes, and seconds in every day. There's the same number of hours, minutes, and seconds in every trading day. So what the institutions figured out long ago is you could anchor algorithms to time. And ES and NQ and bonds and crude oil, they trade on very, very specific time cycles. If you're looking at, for example, most traders will trade off 5-minute charts, 10-minute charts, 15-minute charts, 30 minutes, an hour. Some will get more granular. They'll trade off 3 minutes, 2 minutes, 1 minute. Guess what? None of those time frames that I just mentioned are what the algorithms use, the institutional algorithms, not one. So if you're sitting there looking at a 5-minute chart all day long, guess what? You're not seeing what the institutional algorithms are seeing. And so patterns that look like such and such to you, or this is starting to form a symmetrical triangle, or this is a cup and hand, the algorithms don't look at that. You have to know the time cycles. And put it this way, there's a number of them. We'll just say there's more than 5. We have every one of them, down to the shortest cycle, which is represented by our day trading algo, cycles like our swing trading algo that run on a longer time frame, i.e. this is more minutes per bar than this. But we have every single one. And just to give you an idea, if you're looking at 5-minute charts, the master time cycle that algorithms run on for ES, it's way over 3 hours, way over. I'm not going to tell you precisely, obviously, but you take that master time cycle and you break it down into fractals, which are just smaller, exact mathematical duplicates of the larger time cycles, and that's what you get. And that's what these little purple lines reflect. And that's what these purple lines reflect. So if you see all these purple lines lining up algorithmically, that becomes a very binary price level. Now, we put out a couple of different types of pivots. I'm going to talk about what happened last night and today in a minute. But just quickly, some of the tools we give our traders. End of the day, we provide our Mercury bands. These are long cycle pivots. Even the short cycle is a long period of time. And these are put out before the Globex open. They run all throughout Globex and until the 5 o'clock afternoon RTH future session close the next day. So these work for 23 hours. In the morning, we put out our Mercury dynamic pivots. These are pivots that are run at a specific time in the morning where multiple time cycles overlap. They don't only give you a pivot price, but they give you the expected characteristic behavior. Now, right now, just to give you an example, we had this move down exactly to this white algorithm, okay? It broke our proprietary momentum algorithm. It came right down where? To here. Now, it may find some momentary support and then it'll break. Now, I put out to our subscribers, perfect timing. This price here is 72.73. On our Slack channel, this was posted 35, 40 minutes before this video is being recorded. Time cycle pivots for early Globex. Keep an eye on the following levels. 33.73.84, 33.70.31, 33.69. These algo pivots will move up and down as a function of time and price, but these are key levels to watch in early Globex. So take that that pivot right there, 33.73. Is that important? I would say so. It stopped right there. And you see this all day long with these pivots. So we're in a short trade that we took right at towards the end of the day at 33.81.50. And by the way, anybody that tries to sell you or get you to subscribe to any type of trading system, and they can't do this, and show you every trade that they posted for subscribers in real time, don't bother with them. Every trade that I post is in real time. Now today, you had this crazy day up and down, okay? I know many traders probably struggled quite a bit with this action today. Well, here you go, 37.5 handles as of the RTH close, and we're still in this 33.81 short, and that's what we call a runner. I mentioned earlier we recommend trading in thirds. So the idea behind trading in thirds is when that position starts going your way, you take a few handles off, you adjust your stop. Then you look for the place to take your middle. The middle, we're typically looking for 6, 8, 10 handles or more. And then you have your runner, which is the last piece of the trade, the last third, and you give that enough room so that runner can run. So if you get a back test up here that fails, you're still in that trade and you give it more room. Now again, you can see, where are they bouncing this from? So you can see this in real time while this video is being recorded. Came down exactly, not only to those levels I just showed you that I posted on our member Slack channel, but even if you didn't read that on the Slack channel, you can see on the chart. This is being broadcast on Zoom right now live for our subscribers. You don't need an invitation to take profits when it comes down into this. So there's no guesswork. But let's talk about what happened today. As ES was trading higher, it was trading higher on no volume, none. And when you're looking at your screen and you just zoom your focus out and don't look at the panels on the screen, just look at your screen as a whole and just watch how quickly, perceive how quickly or slowly these ticks are printing. This was like watching paint dry until we got this in the early afternoon. And then all of a sudden the ticks, boom, 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 boom. And then you get another slow meandering move up. And where does it stop? 3 ticks below the resistance level that we put out before Globex opened last night. See, we don't just blind fade a level. Blind fading means, oh, I think this is getting too high, let me short it. We don't do that. We took this short position because we had this level to lean against. Now, you don't just blind fade it either. There's got to be a setup, and we go to more granular charts just a few minutes to find the precise entry, and that's what's posted on the Slack channel. So We knew something was up, and I said this all day long. This doesn't feel right. You're getting this move up on no volume, and the ticks were coming in slow, so slow. It was literally like watching paint dry. And then you get this little move down from 80, what is that, 80, 81, down to 73, and the ticks were just boom, 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 lightning fast compared to what we saw earlier in the day. Then it finds a low where? Right at our proprietary momentum algo, this cyan line. And then the ticks just slowly meander up again till it gets right here within 3 ticks of this resistance level we posted last night. And then you get this extension. Now, you still don't short this move down right here. You need a setup. And if we were looking at very short-term charts, like a 3-minute chart, you could see the exact entry. Because what happens when it does this, I put out either on the Slack channel or mention it on the mic, the short entry is a tick at X price. And that means you wait till it comes down and ticks that price, and that's where you enter. And that price is based on, that's where the support levels are starting to break. Okay, you don't short strength, you short weakness. So you don't just short it here, and you don't short it after this one bar, because it came right back up here and it could have went, straight through and closed on the high. You have to wait for a setup where something in that setup breaks. Now, the other thing I had a problem with, and I mentioned this last night, is you get this built-in BS indicator. When you see people coming on the financial news channels, and now you can see this breaking, or about to break. When you see these people come on the financial news channels yesterday, and what they tell you yesterday all day long, get long, buy the dip, buy the dip, buy the dip, the coronavirus story, it's gotten as bad as it's going to be, buy the dip, buy the dip, buy the dip. Well, there were 5 sell programs yesterday. 5. So while they're coming on TV telling you to buy the dip, buy the dip, buy the dip, back at their shop, they're running sell programs. And while they're telling you to buy the dip, they're selling every rip. And if you go back, and we saw this last Wednesday, we saw it last Thursday, last Friday, yesterday, every blip up they're selling into while they're telling you to buy the dip, buy the dip, buy the dip. And then today, what did they do this morning on TV? After they were completely wrong yesterday telling you to buy the dip because the coronavirus story had run its course and it was getting better. What did they do today? Well, we believe that investors should take a long-term perspective. You know what long-term perspective means? Forget about what we told you yesterday that was wrong. Buy the dip, buy the dip, buy the dip. Well, we're back at the shop selling it. That's just the way this game works. Okay? The sooner you understand that this is a rigged game, the more successful you're going to be. Futures trading is a rigged game. You have to know that, and you have to know the games they play, and you have to know the math behind those games, and that's what we point out. So let's take a look at bonds and crude, because if you go to our website, mercurysignals.com, we have 2 separate trading packages. And you can have both if you want, but there's an ESNQ algo trading package, and there's a bonds crude oil algo trading package. And bonds, we're talking about ZB. So let's take a look at ZB. Now, here's something that I've never understood. The majority of day traders trade ES or NQ. How many people do you know that day trade bonds? I have no idea why that is. Because literally bonds are the easiest thing to day trade. And I think partly it's because people think of bonds as an investment, not a trading vehicle. Bonds are the easiest thing to trade if you have an algorithm like this. The easiest thing to trade. Long here, short here. For the most part, the algo has been long since 57.12, 157.12. It had a couple of spots where it got short and then flipped long lower. Got short, wrote it down here, flipped long lower. And by the way, our algo doesn't flip getting you in an adverse position. And what I mean is, it's not going to get you short and then figure out that it's wrong at a higher price and flip you long. That's not the way this works. So here it was long, got short, here, got long lower, got short here, made money down to here, got long lower, and vice versa. Now you can see that every time bonds comes down into one of these levels, see this nice little W pattern at the bottom, right here, 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 and here? And then you get this move up that fails right at our Mercury band long cycle upper. So if you're long and it comes in here, the minute it comes back below that, you either have to get out of the long position or just outright short it. Comes down here again, finds support. Then it comes up here to our daily bull bear pivot and comes down again and finds support. So that's 1, 2, 3, 4, 5 times. The bond market has been telling you, now again, going back to all the knuckleheads that come on TV that tell you to buy the dip in equities, what's the bond market been telling you? Something's wrong with equities. What's crude oil telling you? Crude oil is telling you that something is wrong with global economic growth. You don't need to know what the up-to-the-minute news is out of China regarding the horrible virus to know that you've got bonds going from the bottom left to the top right of the chart, and you've got crude oil going from the top left to the bottom right of the chart. Buy the dip, buy the dip, buy the dip. Oh, really? So not only do you have bonds going from the bottom left to the top right and crude oil going from the top left to the bottom right, you've had the dollar up, what, 7, 8 days in a row? Panic bid as a flight to safety. You had the Swiss franc up 7, 8 days in a row as a panic bid flight to safety. Buy the dip, buy the dip, buy the dip. They're all idiots. All of them. Well, not all of them. And I'm not talking about the hosts on financial news. I'm talking about the knuckleheads that come on from XYZ firm. Well, we think that the most extreme overbought market in 25 years is a great place for you to buy the dip. Oh, really? Well, they're selling into it. This is literally the most extreme overbought market since 1994. 1994. Buy the dip, buy the dip, buy the dip. They're idiots. Don't listen to them. They'll come on TV and tell you one thing, while back at the shop, their traders and their algorithms are doing the exact opposite. I'm telling you. That's the way this game works. So whether you trade ES, NQ, bonds, crude oil, I really recommend you check out our website, because one of the things that you get, most important thing you get with the subscription, is that we teach you proper risk management. Now look, you know how the saying goes, past performance is not indicative of future results. Nobody's going to make a claim to anything. January in our trade room, ES over 600 handles in January. Is that going to happen in February? No. It could, but we're not going to promise it. You know, it may not happen for the rest of the year. But even though this market's been tough, we don't have losing weeks. We've had one losing day in December, one in January. They were each less than 3 handles, and one in February. And I can tell you right, and it was, Tuesday this week, we lost a few handles. And this is the most difficult market you can possibly trade. But, you know, think of your own trading, or ask your friends who trade. How many of them had one losing day in December, one in January, each less than 3 handles, and one in February there was a couple of handles? And on the other side of that, booked 600 handles in January. So again, past performance is not indicative of future results. Futures trading carries extreme risk due to leverage and margin. But more than anything else, we teach you proper risk management. And that in itself is a master's level education. You think about what our kids, we have 4 kids, think about what our kids spend for college. Hundreds of thousands of dollars. What is it worth to have a master's degree level education in risk management in an algorithmic trading? You cannot put a price on it. Now, we can put a price on our service because we have to, okay? We can't charge you a percentage, nor would we want to. What do we charge for our service? If you're part of the ESNQ, if you trade the E-mini, one handle on an E-mini is $50. Our service costs you a little more than one handle a week. It's $68 a week. We bill it bi-weekly. You can cancel it anytime. You don't even have to pay for a month up front. But a handle and a half a week when we booked over 600 in January and 37.5 today. I would say that's a pretty good deal. Plus, whatever rate is the rate at which you subscribe is guaranteed for life. You can come and go. I mean, you can come to our service for 2 weeks and quit. That's fine. But the price that you joined at is guaranteed. We give you a lifetime rate lock. How cool is that? Bonds, it's the same price. If you want the ESNQ package, $68 a week, a little over one handle a week. The bonds, the NQ package, separate service, same price. We bill bi-weekly, no contracts, cancel anytime you want, lifetime rate lock. There is nobody that gives this level of tools, plus a live chart where I'm on the mic all day long, plus a Slack channel. And the Slack channel is not just for trade alerts. It's got all the charts. It's got all our videos. In the member resources section, you've got tutorials that explain how our pivots work, what time of day they're released, specifically how to interpret the algo signals. You also have our videos that we post. And by the way, if you have not seen this video, please go to our website, mercurysignals.com. It's called Calm Before the Storm. If you click on Weekly Report, you'll see a printed version of it. If you go into the video section, you just click the video menu at the top of the page, you'll see the YouTube video. But this video is posted right on our homepage at the top. And this was the weekly report that was produced Saturday, I believe that was what, February 8th? You've got all these knuckleheads coming on TV telling you, buy the dip, buy the dip, buy the dip. Doesn't matter that we're the most overbought in 25 years. Doesn't matter that nobody has any way to predict what the impact of the coronavirus will be. Doesn't matter that Apple, Microsoft, Amazon, and Google account those four stocks for 14% of the S&P 500 index. Doesn't matter. Buy the dip, buy the dip, buy the dip. They're idiots. There's always a calm before the storm. There are people that come on these channels that tell you really, really important things that will tell you the truth. Problem is you have to listen to the other 90 before you get that one who's going to tell you this market's really dangerous. You got to be really careful. So we invite you to check out our website, mercurysignals.com. We encourage you to sign up for either the ESNQ or the bonds, crude oil. You won't regret it. Just the education on risk management alone is worth many, many, many times more than what the subscription costs. If you're thinking of trading for a living or you're thinking about doing this part-time to supplement your income, if you have proper risk management and you have precise algorithmic tools, you can make money in these markets with the right risk management and the right mentoring. And we provide that for you as part of the subscription. So please go to mercurysignals.com. That's going to be all for the video update for tonight. We thank you so much for your time. God bless you. God bless your family. And we hope to see you again tomorrow.